to this webinar on promoting sustainable capital markets evident from selected African countries that we are delighted to organize in partnership with the Capital Market Development Trust Fund. My name is Marina Finken. I'm the coordinator for Making Finance Work for Africa, a platform for knowledge sharing, advocacy, and cooperation on the Africa financial sector development. And as always, many of you are online today, and I can only salute and thank you for your participation in today's important discussion. Before we start, I would like to take a few seconds to quickly remind you some housekeeping rules. If we can move to the next slide, please. Even if I'm sure that many of you who are regulars to our series are already familiar with. So we will be together for an hour and a half, including a Q&A session. All participants' microphone is disabled for the duration of the webinar. We will ask you please to keep muted to ensure listening comfort for everyone. You will have the opportunity, as always, to submit your question via the Q&A or button, or you will also be able to raise your hand during the dedicated Q&A session at the end of the panel discussion. We will share with you the slides and the recording of the presentation within 72 hours. And if you have any technical issues, please reach out to the organizers of the webinar. Today, and this is quite exceptional, the webinar will be only in English, and we apologize to our Francophone speaker. So as you may know, the webinar is organized by Making Finance Work for Africa and the Capital Market Development Trust Fund, and both initiatives are hosted by the African Development Bank Financial Sector Development Department, which aims to strengthen Africa's financial sector to better serve the needs of the real economy. It is therefore my pleasure and honor to introduce Mr. Ahmed Atout, the Director of the Department, for opening remarks. Mr. Atout is a Pan-African expert with more than 24 years of working experience in Africa and MENA regions. He heads the African Development Bank Financial Institution Group, in charge of developing Africa's financial sector, focusing on financial inclusion and intermediation, trade facilitation, deepening and developing domestic markets, and improving the continent's access to capital markets. In his role, he has led the delivery and execution of funded and unfunded transactions of more than $5 billion in over 30 African countries. He has been leading several types of sovereign and non-sovereign transactions executed through government, non-bank financial institutions, insurance company, guarantee funds, mortgage finance companies, special purpose vehicles, and private equity firms. Notably, Mr. Atout led the operationalization and rollout of the Capital Markets Development Trust Fund, the implementation and launch of the Africa Exchange Linkage projects, the origination and financing of different liquidity and mortgage refinancing schemes, and the bank's support to African countries to facilitate ESG-linked and conventional funding from international debt markets. Mr. Atout, thank you again for being with us today. The floor is yours now. Thank you.
Thank you. Thank you so much, Marina, and good morning, esteemed panelists, distinguished participants, and colleagues. It is my great pleasure to welcome you all to this webinar organized by the Capital Markets Development Trust Fund and Making Finance Work for Africa, two initiatives hosted by the Financial Sector Development Department of the African Development Bank Group. The theme for today's webinar, Promoting Sustainable Capital Markets, Evidence from Selected African Countries, is timely, coming just a few weeks before COP29 in Baku, Azerbaijan. As we convene today, Africa is facing numerous challenges to its ambitions of achieving accelerated, inclusive, and sustainable growth. Chief amongst these are risks related to climate change, as well as a difficult global economic environment on the back of numerous economic and geopolitical risks. The bank's new 10-year strategy covering the period 2024-2023 outlines our vision of an Africa that is prosperous, inclusive, resilient, and integrated. This vision for Africa is anchored on the twin strategic objectives of accelerating inclusive green growth and driving economic development for prosperous and resilient economies. As the African Development Bank, we have recognized the importance of capital markets for the mobilization of resources to drive the bank's development agenda. We place efficient and liquid capital markets right at the center for the mobilization of more than 1.3 trillion US dollars that Africa needs annually to meet the SDGs by 2030. Our goal today is to explore how African capital markets are integrating sustainability aspects into their structures and operations, drawing on practical examples and lessons from across the continent. We will look at how African capital markets are positioning themselves and restructuring to promote sustainability-themed instruments in their respective countries and markets. Our understanding is that the realm of sustainability-themed instruments is broad and may include sustainability-linked capital markets debt, local currency denominated green social bonds, ESG-linked bonds, green-based investment, and sustainable blended finance mechanisms, amongst others. Today, this webinar will delve deeper into the subject of sustainable capital markets, and we are honored to have an exceptional panel of experts who each bring a wealth of experience and unique perspective on how sustainability is being integrated into African capital markets. The webinar will also examine how these developments can be leveraged to support long-term inclusive growth on the continent. In closing, let me thank my colleagues from the Capital Markets Development Trust Fund and Making Finance Work for Africa for organizing this timely and important webinar. Once again, welcome to today's event, and I look forward to a fruitful and engaging discussion. Thank you. Over to you, Marina.
Many thanks, Mr. Atout. If we can then move to the next slide, and many thanks for setting up the context for the upcoming discussion. If we can move to the next slide, just to present quickly the agenda. So we just had some opening remarks. Then we will have three short presentations. The first two presentations will be presented respectively by my colleague Hugues and my colleague Alban Kakou. First on the Africa Long-Term Finance Initiative, and the second to give you more details on the Capital Market Development Trust Fund. And then we will have a technical presentation by Mrs. Cecilia Mouret on promoting sustainable capital markets. And then we will have the discussion. So I will, without any further ado, I will introduce now Mrs. Martine Botta, which will be our moderator for today's session. Martine has worked across the non-for-profit, government, and cooperative sectors. She has experience working in various international markets, including Australia, Indonesia, Hong Kong, and South Africa. Currently, Martine is the Global Financial Services ESG Executive within KPMG, reporting to the Global Head of Financial Services. She has been responsible for the development and execution of KPMG's go-to-market strategy for ESG in banking, insurance, private equity, and asset management. She has presented on ESG issues at various external events, as well as on the board in several leading South African banks. Martine, thank you again for being with us today. The floor is here to now give our participants to the session. Thank you very much. And dear participants, again, thank you for your attendance, and I wish you a very fruitful webinar. Thank you.
Good afternoon, everyone, and welcome to this fantastic event, promoting capital markets evidence from selected African countries. I'm thrilled to be moderating this discussion, and thank you so much for that lovely introduction. And we have an exciting panel and guest speaker planned for today. As mentioned by Ahmed, the aim of our conversation today is to foster a better understanding of opportunities offered by the capital markets at country level from different regions. Before we begin our discussion, I'd like to introduce our keynote speaker, Cecilia Mouret from FSD Africa. Cecilia brings 25 years of experience in the areas of sustainable finance, policy and investment instrument development, as well as a technical capacity to support governments and investors. I'll now pass to Cecilia for our keynote. Thanks, Cecilia.
Thank you so much for that introduction, and thank you for having me here today. It's a pleasure to be here, distinguished participants and panelists. My name is Cecilia Bjarborn-Morai. I'm Senior Capital Market Specialist with FSD Africa, and I'm actually standing in for Dr. Evans Osano today, who many of you may know. So I'll try to fill his shoes. Thank you so much for the opportunity. So I am attempting here to set the scene. I think I can launch right into it. Is that fine?
Next slide, please. Sorry, Cecilia and Martin, sorry to jump in. I believe this slight mistake. Before jumping into your presentation, Cecilia, we will hear first from colleagues, Hugues and then Albert for a quick presentation of some of the initiatives within the African Development Bank, and then we will give you the floor again for the presentation.
Perfect, yes. I'll wait.
Okay, sorry, my mistake. Then Hugues, the floor is yours for the ELTF initiative presentation.
Okay, thank you. Can you hear me? Okay. Thank you, Marina. I think I'm mindful of the time. I will try to be very quick. I think the introduction, the remark by, opening remark by director have already set the context. And here today, what I try to do is just to share some highlight on this flagship initiative that we are pursuing within the Making Finance of Africa initiative. It's the Africa Long-Term Finance Initiative. And the purpose is actually to raise awareness on this initiative that there's a strong nexus between the development of capital market and the availability of long-term finance. I will put the website in the chat panel, so you can really go and visit our website. Next slide, please. Okay, so the main objective of these initiatives is actually to support the development of long-term finance market in Africa by making access, availability of, increasing the availability of data and accelerating policy reforms. The initiative is actually built around two main pillars. The first pillar, it's country diagnostic. The second is scoreboard, and each pillar has a particular objective, although they are interlinked and mutually reinforcing. Country diagnostic actually aims essentially at trying to analyze the long-term finance market at individual jurisdiction and come up with a recommendation in how to accelerate the development of long-term finance market so that they play more substantial role in supporting the real economy. On the other side, the scoreboard is actually more a platform which provides access to a database, a one-shop place where you can access information and data on long-term finance market. It's also allowed really to do some sort of benchmarking and country comparisons to know where a country stands in terms of development of long-term finance market. You can see from here that there is some sort of diagram which shows actually how we really approach the long-term finance scoreboard and diagnostic in terms of how that's some components, depth of the market, source of the resources and the enabling environment and the use of long-term finance. Next slide, please. So this provides some sort of infographic in terms of benchmarking and country comparisons. We have example here of Kenya, Uganda, and then you can see how you can benchmark against Africa. At the moment, we have conducted 3 rounds of data collections. It spanned from 2013 to 2020, and we'll update the database and probably have information available or data available till 2020, that 22. The advantage that we have is serious, about 10 years of data on particular indicators, which will really ease analysis in terms of doing the analytical research, conducting some kind of time series analysis and deep research on long-term finance market on the continent. Next slide. Okay, so as I mentioned, there is a strong nexus between the capital market development and long-term finance. So far, what is the status of long-term finance market on the continent? What we had found from some of the diagnostics that we made, basically we had we conducted diagnostic studies in Ghana, in Cote d'Ivoire, and also Ethiopia, and there's one going on the CEMAC regions. What we found is that in most cases, the asset financial sector is really heavily concentrated in the banking sector, and even institutional investors, which are sometimes the main sources in advanced market sources of capital for financing long-term investment, usually put their resources or investment in banking product like savings deposit and term deposit. But what we also found is that in most cases in Africa, there's some sort of the predominance of the government or public security on capital market, which in one side provide really a good platform to develop the capital market, but also it can have an effect of crowding out the resources that can be made available to the private sector. But having said that, there is a possibility really to develop capital market further and make them more supportive of development of the real sector in African country. Next slide. I will end here, and we have taken the example of the infrastructure, and we found that where we have really advanced capital market, where capital market are really vibrant, we also notice that there are more solutions to finance, for instance, the infrastructure. Capital market will come up with more easy solution to support infrastructure development through risk guarantee schemes and other type of product. And then we also see that institutional investor will play a much bigger role in terms of putting resources available through the capital market to support some of these investors. This investment, this is just an example in the case of capital infrastructure, but it could be also the case with the housing sectors and other sectors that are really important for the development of our economy. And the development of capital market also comes up. We see this what we call the escalator ladder. More the capital markets develop, then there are more transparency in terms of information. There are more. We found also that there's a clear reduction in the risk, and that's why the capital market work, and that's also why it's easier to finance like infrastructure. I will stop here. Well, just the purpose was just to give you highlight. I will put the link to the website in the chat box, and thank you very much. Have a good day. Back to you, Marina.
Yes, many thanks, Hugues. And now we introduce Mr. Alban Kakou to give a quick presentation on the Capital Market Development Trust Fund.
No, thank you, Marina, and thanks to the Making Finance Work for Africa initiative for hosting us today. So I think I'll just give a brief presentation on the Capital Markets Development Trust Fund. So my name is Alban Kakou. I work in the Capital Markets Development Division, and I'm currently running the CMDTF. So if we can move to next slide. So as Ahmed indicated in the introductory remarks, capital markets development is quite critical for us as an institution. So it really speaks to our efforts to crowd in resources to support the continent's developmental agenda. So now when you look at capital markets development, it is capital intensive. And historically, as an institution, it was very challenging for us to identify the right pockets of funding to help our regional member countries. So 5 years ago, we took a decision as an institution to actually create our own capital markets development trust fund to actually finance technical assistance for capital market stakeholders. As you can appreciate, capital markets is not the the most attractive topic for donors. So we were fortunate enough to actually identify 2 donors to start with, and these are the Ministry of Finance of Luxembourg as well as the Ministry of Foreign Affairs of the Netherlands. So we created the Capital Markets Development Trust Fund, CMDTF, 5 years ago. And we took a deliberate decision with the donors to actually start the focus on a particular region to be able to show that we can generate concrete outcomes, sustainable outcomes before widening the scope of the fund. So the fund started 5 years ago with focus on West Africa. Last week, I'm quite pleased to announce that we had received the support of a 3rd donor, the Kingdom of Sweden, through the Sweden International Development Agency. So that's quite positive. Next slide, please. So essentially, we have 5 key areas that we are looking at the CMDTF. So the first one is about improving regulatory and legal environment for capital market stakeholders. The second one is about upgrading capital markets infrastructure. So here, essentially, we are looking at electronic trading platforms, real-time surveillance systems, for instance. The third one, and I think is quite relevant to today's seminar. So basically, we are trying to promote the development of new capital markets products. So this is this ranges from green bonds to social bonds to gender-related bonds. The fourth one is about broadening investors base, and basically here we are looking with we're working with institutional investors. And the last one is about promoting knowledge research that is relevant to capital markets development. Next slide. So in terms of the stakeholders that we are working with both country and regional stakeholders. So in terms of the country stakeholders, we are essentially working with the stock exchanges. So for instance, we are working with the stock exchange of Cabo Verde and the regional stock exchange in the Waimo region, BRVM. But we're also working with capital markets regulatory authorities. So for instance, we have a couple of projects with the Securities and Exchange Commission in Nigeria, as well as Ghana. We're also working with ASEA, the Association Stock Exchange, African Stock Exchange Association. And we're also working with central banks. The fund is really gaining traction. For instance, we've received the Partner of the Year award from the Cabo Verde Stock Exchange, and we are receiving a lot of requests from capital market stakeholders outside of West Africa. So that really speaks to the relevance of the trust fund. Just to highlight with a few projects that we are currently undertaking. So for instance, in Nigeria, we're working with the SEC to help them acquire a real-time market surveillance system. In Cabo Verde, for instance, we have supported the country to establish its first ever capital markets master plan. And we are also working in Liberia to help the country reform its pension funds industry. Next slide. So in terms of the way forward, so as I was indicating, so the fund started to focus on West Africa, but now we have actually a new donor. We are actually quite flexible in the terms of countries that we are looking at. So we will be basically broadening the geographical scope, and I think beginning of Q1 we should issue a call for proposals to actually identify additional projects. I think it's quite timely. We've been receiving a lot of requests, even from panelists today. So I think it's quite timely. We are really looking to deepen and increase our impact on the continent. Yeah, so I think at the moment we have those 3 donors. We have a healthy pipeline of projects, and we are quite happy to take requests on a bilateral basis after the webinar. So I think I'll stop here. Wishing you a good webinar, and again, thanks to our colleagues from Making Finance Work for Africa.
Thank you, Alba. Cecilia Martina, the floor is yours, and I apologize again for the slight mistake earlier. Thank you. Cecilia, you're on mute.
Thank you. No problem at all.
Okay.
Yes, you can hear me now?
Yes, now we can hear you. You can go ahead. Thank you.
Great. So again, I'm from Financial Sector Deepening Africa, FSD Africa. We've been in existence for about 10 years. We have some over 30 projects across many African countries, and initially we were funded by the UK government, but now a large and broad range of funding partner has also joined. So I think we can launch right into it. I will speak a little bit more here in setting the scene around of course, the importance of capital market development, also in the context of tackling some of the large developmental challenges on the continent, and in particular, how sustainable finance instruments can be part of the solution. I will touch on it briefly, and we will hear more details from the panelists with the recent developments and examples. Next slide. And so the high-level data for Africa, just as for the rest of the world, hold both great challenges and opportunities. I can share that I was in China last week, and I was reminded about how technology and efficiency, and green technology in particular, and developed at scale, can really harness the promise of a large and growing population and workforce, as they have done with their 1 billion people. And parallels can be drawn in terms of solutions in the future for the 2.5 billion that we are anticipated to be on the continent by 2050. And I think a lot of these opportunities are really present in the growing population, the growing workforce. Africa is rapidly urbanizing, and a significant investment opportunity in the built environment, in infrastructure, energy, and so on. And Africa really has such a big portion of the global resources, if we're talking about critical minerals, renewable energy, and also carbon sinks, and great promise for green industrialization. So these are some of the opportunities the capital markets can help harness. But of course, there are also challenges on the horizon around growth rates, high levels of indebtedness, exchange rate risks, and so on. And again, now we are looking at how can we couple capital market development and sustainable finance to harness these opportunities while addressing the challenges. And I think this is where we will hear very interesting updates from the panelists today. We can stay on this slide here. So I would just say that in this equation of capital markets and sustainable financing, domestic capital mobilization and also private sector capital mobilization is critical. In other regions outside of Africa, they present a much larger portion of the financing solution, for example, to address climate resilience. So some of the good news, according to the recently launched CPI, that's a Climate Policy Initiative report on climate financing flows for Africa, is that these climate finance flows have indeed increased over the years, but nevertheless not enough to fill the need. And again, they are saying that domestic capital mobilization will be very important indeed. It's currently only 10% of the overall. And so for this to happen, for the functioning capital markets is critical to unlock this capital, including the need for local currency financing to avoid exchange risk. And the capital markets, both the public and private markets, are also then fundamental to innovation in instruments and really expanding investments across asset classes across the continent. So I think we can switch to the next slide. And it's not just us working in the capital markets that are pressing on the need for the capital market development. We saw, for example, at Africa, the first Africa Climate Summit hosted by the African Union and the Kenyan government in 2023, that there were calls again for domestic capital mobilization and the need for development of the markets. And the Nairobi Declaration, as it's referred to, coming out of the summit, also talks about parallel needs for global financial architecture and MDB reform, so that we really work on all the capital solutions. We need all the capital from all sources urgently. But again, just pointing out that the capital markets and domestic mobilization is crucial in this. Next slide. I think this was largely covered in the presentation by a previous colleague, but it's just to flag where we currently are in the journey of capital market development. So just on the right-hand side here, taking a few markets as examples, just flagging Kenya, where the capital markets just 1% of corporate debt financing and banking being the rest, 99%. I think a previous colleague pointed this out as well. So this is, of course, in stark contrast to, for example, the US and China, where capital markets represent around 70% of corporate financing. And while that may take us a while to get there, we can look closer to an example of Malaysia, where it represents around 20%, which is a good, probably a good target to aim for. But in addition, with the smaller capital markets that we have, they are dominated by government issuances and also, a little bit of equity by a handful of issuers. So there's great scope and room for growth there across the asset classes. But also to point out that some good news in all of this is that domestic institutional investor base in Africa has grown year on year and is now a significant pool of capital at over 2.3 trillion US dollars equivalent that can be invested in productive and sustainable projects and instruments. However, in many countries, that asset base is actually larger than the market available to invest in. So hence the urgent need to continue the capital market development efforts. Next slide. And again, just pressing on some of the real risks that we run with underdeveloped capital markets. So, for example, the exchange rate risk associated with foreign currency borrowing, that is real if the local currency depreciates nearly 4 times against the US dollar in just a year. That is a huge risk for borrowers in foreign currency. And also the short-term, relying on short-term financing for long-term funding needs is clearly also a risk, as we can see here with the Kenyan example again, where the short-term bonds or shorter-term bonds have really, fluctuated and really jumped to high interest rates in a short period of time. So coming back and seeking refinancing can be a very different situation from just a year or two ago. So these are really real and present risks that we, of course, are trying to address. Next slide. And of course, all the solutions are needed for the long-term funding needs in infrastructure, housing, education, and health. And really, the capital markets can help address many of the fiscal, economic, and development pain points across the continent. And the capital markets are also good for blended finance solutions, where constrained concessional financing can be used to mobilize domestic and private capital by using guarantees and other instruments to make it more comfortable for investors to come in. And we also have to remember that enabling the institutional investors to come into the capital markets actually opens up for a wealth creating opportunity that they otherwise would not be able to take part in. It would be mostly reserved for banks. So the capital markets is an important wealth creating opportunity also for the institutional investors in the local markets. Next slide. And this is just a basic overview of what it is we are trying to do as we are doing this work, really moving large pools of capital on the left through various instruments to where it's needed on the right. And if we want to, and of course, it's important with all the supporting regulatory and policy frameworks to support this. And if we can make a small call for action here to all the actors in this value chain that is outlined here, all of these pieces, of course, need to work together. And there's great room, for example, for DFIs to follow the examples of the Making Finance Work for Africa and the Capital Markets Trust Fund that we've just heard, to become more of anchor investors in the capital markets to move beyond direct lending. And also for institutional investors and their fund managers to look beyond short-term financial returns to also looking at the long-term risk-adjusted returns and a broader range of instruments and assets to invest in beyond government securities. So really, there's much that still can be done, and everyone needs to work together on this. Next slide. I'll wrap up here shortly. I think we can skip this. This is just the areas that FSD Africa is involved in terms of its TA work. So just segueing into the sustainable finance instruments that I know some of the panelists will speak about, of course, the sustainable themed bonds like green, social, gender bonds, blue bonds, many different labels, but basically capital market debt with an intentional impact in environmental and social spheres have really seen a tremendous growth in the past 5 to 10 years. based on investor demand, in particularly globally, because they do recognize that green and socially targeted investments are better investments than plain vanilla projects, if we can call it that, or instruments. However, as we know, only 1% of this particular type of capital flows to Africa. So there's still much we need to do in line with what we've already said to unlock this capital. You can go to the next slide. FSD Africa has had the pleasure to support many of the issuances that have come to the market in the past 5 years. We've supported some 25 sustainable bond issuances amounting to around $1.2 billion US dollars equivalent across private and public issuers, across sectors, across the continent. And last slide. I just wanted to point to also a great development in the market. There's with the African ESG taxonomy, initially for financial institutions, that is supported by the African Development Bank, AFAC, which is a number of financial institutions on the African continent, and really to support the development of a coherent guiding framework for green type of projects, socially inclusive type of projects, and providing a coherent continental definition of those kind of projects. And I think we will hear from also panelists talking about national and regional taxonomies. And so there's a lot of great work being done in this space, which will be one of the critical pieces to help the sustainable finance instruments really grow and receive more capital flows on the continent. So I think I will stop there and hand back to Martine for the rest of the panel. Thank you so much.
Fantastic. Thank you so much, Cecilia. That was really a whistle-stop tour through sustainable finance. So I absolutely loved it. And I love to see that refresher when you sort of give the overview of the whole ecosystem, because I think sometimes we get really lost in our own little silos. So it's great to sort of have that holistic overview. And again, echoing your sentiment, great if everybody who's on the call can think about what they can do to contribute in that ecosystem. I also loved what you said about Africa as a solution to the climate crisis and not a victim. I think that's really powerful messaging, and something that I think the way that, I think Africa does have an image problem on the global stage, and I think this is certainly a way that we can look to fix it. So fantastic. Thank you so much.
Thank you.
Now, no worries. And we're going to hear more from you because you're going to be on our panel as well. So I'd like to invite our panelists to come off camera and take the virtual stage with me. So if we could have them come off camera, or come onto camera rather. Fantastic. I can see Gatia, Mahamadi, Hiba. Excellent. So on the panel today, we have an illustrious group with decades of experience between them. This includes Mahamadi Balima, who is the head of sustainable finance of the Financial Markets Authority of the West African Monetary Union, Kopano Bolokwe, who is the interim chief executive of the Botswana Stock Exchange, Gatia Kurungi, who is the head secretariat of the Kenya Pension Fund Investment Consortium and the managing director of Spearhead Africa, and Hiba Sarafi, who is the vice chairman of the Egyptian Stock Exchange. So thank you so much to all my lovely panelists for joining us today. I'm going to start with you, Gatia. So turning to your local market, which is in Kenya, the Kenyan pension schemes have significant assets under management in the region of $15.4 billion US dollars, which can be mobilized towards sustainable investments. How can Kenyan funds be encouraged to allocate a larger portion of their portfolio to sustainability-linked instruments?
Thank you, Martine, and it's a pleasure to be here on this webinar. Yes, you're right. The size of the Kenyan pension scheme industry is slightly north of $15 billion and is expected to double in the next 5 years as we have greater pension penetration in our market. However, at the same time, you find, as Cecilia had shown us in the presentation, that majority of our assets are invested into a handful of equities and mainly government bonds. Now, the regulator or the regulations do allow us to invest in a variety of asset classes. However, there isn't a specific asset class that's defined as sustainable or sustainability linked finance, and that area of sustainability is really more of a flavor of the existing asset categories. So, for example, pension schemes in Kenya can invest up to 10% of their assets into infrastructure directly. They can invest 10% of their assets in private equity or private debt, 20% into corporate bonds, 30% into REITs, and 90% into infrastructure bonds that are issued by the sovereign. And all of those can be used to, in terms of sustainability linked financing. So on a foundational level, the regulations are conducive. But what is really required right now is product, or I could put it another way, pipeline, so actual opportunities that are structured in a format that works for these pension schemes. And this is primarily through capital market instruments. So remember, these pension schemes are very conservative investors, and they invest in what they know and what works for them. And typically these are capital market instruments that provide some element of tradability and price transparency. But I guess, but I would like to also just highlight, overall, what is required is that these investments also generate sufficient returns. Remember, that is the number one priority of these pension schemes. And so, despite or regardless of the, let's call it, the impact benefits that these sustainable linked investments will have, it's important to recognize that the pension schemes will only be able to invest in areas that will generate sufficient returns and would be appropriate for the management of long-term pension assets, basically. Thank you.
Yeah, absolutely. And I think that long-term investment is something that the pension funds have in their favor. On that, I'd like to pass to to Kapano. Voting days in Botswana, so thank you so much for joining us. I understand the Prudential Fund rules have increased investment allocation to infrastructure funds in Botswana. So we touched on infrastructure funds now with Gatia. Can you speak a little bit into that, into what you're seeing in your market?
Yes, thank you. Good afternoon to everyone that has joined the webinar today, and it's a great pleasure to be here. Botswana is a very interesting market in the sense that for the longest, or historically, we've been a net exporter of capital. So the Prudential Fund regulations or the pension fund rules would mandate that up to 30% be invested locally. But since last year, it has been amended such that up to 50% will be invested locally and 50% offshore in a staggered manner up to 2027. So we are going through a period of time where our market is awash with cash liquidity, but we still find ourselves in a situation where the investable assets, the pool of investable assets, is very shallow. I think this is why there's been an improvement in the Prudential Fund regulations, which were particularly to increase the investment allocation to infrastructure, to double it to 10%, and then also recognize foreign private equity, local private equity, as well as hedge funds. And most interestingly, we've seen encouragement insofar as ESG investing factors are concerned, where the regulator now encourages pension fund trustees to take into account the ESG investing factors in their investment strategies. There's been a number of enabling factors in Botswana insofar as sustainable finance is also concerned, from a regulatory point of view, from an incentive point of view, capacity building, as well as strategic partnerships. So the market, I would say, has really taken off since December last year, where we saw our first issuance, and now we've seen tangible progress regarding updating program memorandum by different entities listed so that they can provide for the listing of sustainable bonds on the exchange. But the market as it is still dominated by equities, and then of course fixed income of different tenors and different issuer profiles, government, corporates, commercial paper, as well as long-term bonds, and at some point supranational bonds.
Fantastic. And I'd be really keen to hear, Hiba, is this similar to something that we're hearing in your market in Egypt?
Yes, hello. Yes, hello, Martina. Yes, in Egypt, what we've done, okay, what we've done in Egypt, you know, Egypt has always been like a pioneer on the sustainability front, and it started a journey like back in 2010 with the first launch of the S&P index. We were the first in the MENA region at the time. Then we decided to join the United Nations Sustainable Stock Exchange, and we really became very active on the sustainability front regarding issuing a model guidance for listed companies just to start reporting on sustainability. We started to provide training program and educational programs, and we had this capacity building on sustainable growth, and we conducted like several workshops and conference and training sessions to promote the ESG adoption. We also started to have and to join hands actually with the current framework GRI and TCFD, and we provided all those training to the listed companies and to the market participants, to the staff at the stock exchange, even to regulators and all the stuff. We took like a leading position even on the federation side with ASEA, World Federation of Exchange. We're currently sharing the sustainability committee at the African Stock Exchange Association. We started by issuing our first sustainability report. So we're trying to be very active on the sustainability front, and we're trying to embed sustainability in our DNA at the stock exchange. And the recent achievement, and I would say that's the key achievement in sustainable finance initiative that we had recently, is the introduction and the launch of the Africa Carbon Exchange platform. This is Egypt's first voluntary carbon regulated voluntary carbon market, which with the aim of supporting the Egyptian and the African companies in reducing their emissions. And the initiative actually enhances the sustainable investment opportunity and reinforces EGX role in environment finance across Africa. The vision is to serve as the Egypt platform first, platform and voluntary carbon market platform, which allow business just to buy and sell carbon credits just to offset their emissions. But not only that, in our plan and our promotional actually campaigns, just to trying to encourage the listed companies and the market participants to reduce their emission and to try to communicate the benefits of start reporting on the sustainability initiatives and reduce their emissions, is the fact that they can now try to monetize part of their investment expenditure by having those credit and carbon credits traded on the platform. And through this carbon and through this Africa Carbon Exchange, actually EGX, in fact, it provides this transparent, efficient mechanism for companies just to participate in the climate action by buying and selling those carbon credits. And we're trying as much as we could at the time just to adhere to all international standards. We work hand in hand with the Financial Regulatory Authority in putting up and setting up the regulatory framework when it comes to the listing, the trading rules, the clearing rules, even the registration of the projects, the validation verification bodies. And we try to set up all the regulatory framework. We wanted to make sure that everything has been put in place as I said, we worked hand in hand with the Financial Regulatory Authority, which actually started accrediting some of the VVPs, like, for example, Economy of Love, this domestic one, in addition, of course, to the Vera and the gold standard. By doing so, actually, EGX envisioned Africa Carbon Exchange as a leading model for Africa's carbon market, because we're trying to establish this new asset class within Egypt's financial landscape with potential for international partnership to support Africa's transition to a low carbon economy. I think we have we've seen, actually, we announced the launch of the carbon market in COP27, but we just saw the execution, the first 2 transactions. I just wanted to share a couple of slides, but it's okay. We've seen this couple of transactions, and we're working really hard to promote the supply and the demand side. We've seen a lot of interest in the market, but again, there is a lot actually of challenges for now. And the main challenges is people are not really aware. People are not aware of the carbon markets, what's in it for them, and we really need to work on the capacity building for everybody. There is some kind of what we've seen, there's some kind of inconsistent data availability. People, they struggle in aligning with the best practice. We have very limited investor awareness, and that's why what we're currently doing is just we're trying to have, for example, some regulatory support. We now, ever since 2021, we made it mandatory for listed companies just to report on their ESG. So we have mandatory ESG disclosure requirements. That's a clear framework for disclosure. We have this capacity building for regulators and market participants. We're trying to work hand in hand with the investor listed companies and international organizations just to spread the knowledge. And we went even a little bit further by trying to automate the reporting tools. At the end of the day, if we have this fragmented ESG reporting practices, people, they get confused. And they really need a hand if they want to comply to the ESG reporting requirements. They really need a hand. So we're trying to see if we can possibly automate the matrix of the disclosure requirements. At the end of the day, we need, I would say, for Africa, what we need to do is just we need to prioritize the ESG disclosure. It really has become imperative for market participants, companies, investors, and regulators just to prioritize ESG disclosure as a key driver of sustainable investment. We need to encourage this greater collaboration between stock exchange, regulator, and investor just to develop ESG frameworks that are both locally relevant and globally aligned to ensure a stronger future for our markets. We need, of course, to commit to the capacity building, because an ongoing capacity building for everyone is very essential just to drive the widespread adoption of ESG practice. Africa has a lot of potential, and to project a future where Africa's capital market drive transformative sustainable development to leverage on Africa's young population, abundant resources, and increasing regional cooperation. I think it really has become imperative now. By chairing the sustainability committee at the African Security Exchange Association, we found out that a lot of people, that we don't have much of ESG disclosure. So we're really lagging behind on that front. So there's a lot to be done. There's a long way to go in the capacity building and spreading awareness. People, they need to know what's in it for them and the benefits. and they need to comply. They need to start actually reducing their emission and to report. And one of the most important thing actually is just to start introducing the concept, for example, of the CBAM, which has become really very important and crucial topic now, because otherwise they wouldn't be able to export since the beginning of 2026. We should also actually look on having the taxonomy, a taxonomy for Africa. I would say that's again one of the things that we probably need to look at, to have some taxonomy for Africa, and to work hand in hand. It's just it's a collaborative work at the end of the day. So, and I stop here.
Yeah, well, this was fantastic. I think the carbon credits discussion is really interesting because, you know, as a sustainability practitioner, so many people say like, you know, carbon credits are just a way to offset what polluting companies do. But I think more and more, from more insights that we've got on this, it's actually just part of the solution. And if you can monetize, you know, nature or carbon, it's a great way to really protect certain areas that would otherwise be made industrial. And I know that we've opened a carbon trading desk here in Johannesburg as well. So thanks so much for those insights. I know you were touching on there about having sort of more collaboration between the different regulators. Kapana, I'd like to throw to you now. Do you think that African countries should collaborate more closely on a unified approach to sustainable finance across the continent? We talked about ESG disclosures. I know ISSB is being implemented in a lot of regions across Africa. Could you reflect on that, please?
Yes, yeah, thank you for that question. The reality is that African markets are very small by nature in terms of the listed instruments across the different asset classes, but also in terms of depth, as well as the diversity of investors, market infrastructure also included. So there is a commendable initiative at Africa continental level that is spearheaded by the African Exchanges Association, ASEA, in collaboration with Global Reporting Initiative, which is aiming at improving the sustainability standards within the continent by way of facilitating the formulation of sustainability disclosure guidelines across different markets. And I've seen that happen in Nairobi, or Kenya, Nigeria, Ghana, Eswatini, and lately in Botswana. And this has been a commendable collaboration between the two entities that has developed, you know, tangible benefits in elevating the standards of disclosure within individual capital markets, but also ensuring that there's a lot more comparability and consistency in the type of disclosure guidance that are developed across different markets. So we developed, we launched our own in August, and we've since gone on a couple of capacity building initiatives, which are targeted at investors, and then those that are targeted at listed companies, so that we improve awareness, we build capacity, but also improve the propensity to adopt these disclosure guidelines as core. Because in the short to medium term, they improve the comparability of the disclosures, and at that level, we could build or we could develop ESG ratings, which is something that the Botswana Stock Exchange has already gone ahead with by partnering with another entity, Risk Africa, in order to produce ESG ratings for the companies listed on the stock exchange using some artificial intelligence powered platforms. And the essence of this has been to not just provide business intelligence and analytics, but also to uncover those gaps that could make it competitive for companies to raise capital at a reasonable cost and appeal to a larger audience across the globe and not just locally. We are seeing collaborative efforts, speaking of the BSE also, with exchanges across the region by way of memorandums of understanding. We have one with Zimbabwe. Zambia is interested in working with us. Eswatini is interested in coming for a benchmarking exercise. We've held a similar exercise for Rwanda and Ghana, so that we look at the nuances of each of these markets, and they get to learn from us how to develop or put in place the building blocks that could deepen the capital markets, introduce new instruments, improve diversity of the participants, and not just the investors, but also the intermediaries, optimize the infrastructure markets technology that we have so that it covers as many services as possible, including data, but also ensuring that we become visible in the international community. So some of the exchanges within the region, we've also assisted them with being part of the global association, such as the World Federation of Exchanges, where, as you'd see, there's a lot of peer learning, exchange of case studies and prototypes, research coverage as well, which helps us to be visible and to keep abreast with the developments continentally and globally.
Fantastic. Thank you so much. I think that ESG ratings piece is really key for investors, as it's becoming more and more prevalent that investors are looking at those ratings when making those decisions, and of course, attracting that foreign capital.
And maybe the one thing I could add that supplements Cecilia's presentation in there is that within the SADC region, the Committee of SADC Stock Exchanges has partnered with FSD Africa to develop the SADC Green Bond Program, where FSD Africa leads capacity building. They provide technical assistance as well as financial assistance. So most of our issuers, potential issuers, have interacted with FSD Africa for technical assistance and for prospects of financial assistance. And this is a very commendable partnership because FSD Africa is able to assist in selection of assets, the development of ESG frameworks or sustainable bonds frameworks, but also pay for independent verification, which is a very costly exercise, and also assist with post-issuance reporting. So we're seeing a lot of interest and appetite on the back of this existence of this partnership, because I think when it comes to the ESG journey and issuances, the major obstacle for many has been the cost implications. And if you compare that with the yield, it really has to make sense as to why somebody would issue a bond and there'll be an uptake at a lower yield, but and also there should be subsidy insofar as intermediation costs are concerned.
Yeah, and I think that the piece on like a vanilla bond, you don't have as many KPIs to reach. It's a lot more resource that you required. So I think that is a big factor for people to look at when they are looking to raise green finance. So I'm interested to hear Mahamadi Balima on this topic, if you could. Are you able to reflect on your experience in building sustainable finance instruments? Maybe you can touch a little bit on what Kopano has shared. And do you think that this is going to help to bridge the continent's vast sustainable development financing gap?
Okay, thank you, Martina, for giving me the floor. On behalf of Chairman of WAMU Financial Market Authority, I would like to thank Making Finance for Work for Africa for inviting us for this interesting webinar. I would like to remind also that our market covers each country of WAMU country, and we are perfectly integrated in a model of success for common financial market in the world. So, well, our journey toward the sustainable capital market began at 2015 at COP 2022 in Morocco, where we signed a Marrakesh Pledge, a commitment to develop a sustainable capital market to help financing adaptation projects and fight against climate change in our region. With this in mind, in March 2020, we published a specific guidelines for issuance of a green, social, and sustainable bond in WAMU market. The framework complies with the international principle and best practice, such as the principle of green bond and sustainable bond for International Capital Market Association (ICMA), and also for green bond standard for CBI. This new instrument aims to expand investor base, improve conditions for financing innovative projects at a competitive cost, and accelerate the achievement of sustainable development goal and diversify financial instrument for investors. So 2 years after the implementation of this framework, we have registered only one emission in our region. In this emission, it is a green bond around $9 million US in our market. So we realize that we have to support the market and raise the awareness among investors and users. So we carry out a study on the depth of sustainable finance in capital market to ensure that there was a potential for sustainable finance in our region. We then develop a strategy for promotion of sustainable finance in our capital market. And in part of this strategy, we have organized an international conference that's called West African Sustainable Finance and Investment Forum, WASFIF. That's brought together more than 400 participants in Abidjan in September 2023. And also we develop and establish the WAMU taxonomy for green, social, and sustainable project in our market. And after just 1 year after these promotional activities we have established, we have carried out 4 green bond emission on our market and around 330 million US dollar. Yeah, and currently we still have 2 and 3 green bond and social bond operation in our pipe that could be issued at the end of this year. So the adaptation of this instrument has made it possible. It's attract more investors and users to the sustainable capital market and mobilize more financing for projects with huge impact in environmental and social aspect. In the same spirit of developing innovative instruments for sustainable finance, we plan to develop a specific instrument and regulatory framework in 2025, such as sustainability and this mutual fund vehicle for green, social, and sustainable bond, sustainability linked bond framework, a specific framework for this kind of instrument, and SDG bonds, blue bond, because water is some issue in our region, and a specific framework for gender bond in WAMU market. That's yeah. Yeah, it's okay.
Well, congratulations. I mean, that's a massive shift. And from what I'm hearing, what you really needed to do was get the word out that, you know, this was an option. You set up a taxonomy. Obviously, we've heard taxonomies are great because suddenly everyone's got reading the same dictionary. A lot of these taxonomies are interoperable. They're based on the EU finance taxonomy as well. So foreign investors can also see, you know, if it says it's green on the can, then what they've got is green. So yeah, big congratulations on what sounds like a really successful program of work. I'm conscious we have 15 minutes and it's been such an interesting conversation. I feel like we could go for another 45, but I'm gonna look now to the chat to see some of the questions that have come through from our audience. So I might get to you if that's okay, Gatia. So pension schemes are cautious on investments, but how can these pension funds support capital markets, especially private debt?
I think it's not so much a question of how can they support capital markets. They are already active participants in the capital markets, and in fact, they want to do a lot more. But if we were to link it to sustainability linked investments. One point I will note is that majority of these investments currently, or these opportunities, have been geared towards DFIs and donor partners, and they've been denominated in hard currency. And the challenge with that is that local pension schemes have their inflows and their liabilities in local currency, and as such, although they are allowed to invest in dollars or offshore denominated assets, those will never be at the kind of scale that a Kenya shilling or any local currency investment would be. So it's a question of scale. What can be done to increase the scale of these investments? And so I think there are really two things. The first thing is, first of all, the investors are very keen on avoiding complexity, and this FX risk that is brought about by offshore or denominated investments is many times a deal breaker. And that's because we have, as Cecilia mentioned in her presentation, it's not uncommon to find that the returns from an investment can be wiped out simply by currency fluctuations. And at the same time, we don't have a deep FX hedging market. And even if we did, that would be additional costs to the investments. So, just to remember that complexity is the enemy, especially when we're looking at scale, and that the local investors would be naturally inclined to look at domestic currency-based opportunities.
Fantastic. Thanks so much for taking that question. Another question we've got up in the chat: why do international investors from the private sector are not interested to invest in local currency? Truth, the local finance market. So I think would you say we addressed that? So why do international investors from the private sector not interested to invest in local currency? No, okay. Capano, don't you think 50% offshore investment is too much for pension schemes looking at the risks inherent? Is the 50% exhausted?
So the first part of the question says?
Don't you think that 50% of offshore investment is too much for pension schemes looking at the risks inherent?
Yeah, I think our approach to this as a country was to say that we want to use the assets generated by our nationals for the development of the country. For the longest of times, and it goes without saying that these assets have been developing, different sectors and countries outside of Botswana, because ultimately the pension funds assets get invested in infrastructure and growing companies from SME level to medium to blue chip levels. But we haven't experienced the same here in our country. So the money that is coming back into the country is here to stimulate appetite and influence the creation of assets across different asset classes: infrastructure, SMEs, corporate bonds, government bonds, including green bonds, social bonds, gender bonds, and the like, as well as structured instrument. So if you look at the landscape right now, there's about 13 exchange traded funds that have been given local asset status, meaning that they're now in the process of listing on the Botswana Stock Exchange. And they cover different underlyings and geographies. And this comes at a point where we currently have 4. So because of the presence of liquidity in the country, issuers from outside Botswana are now encouraged to expand their offerings into the local market. But also some of the Pan-African companies are now looking to establish head offices in Botswana, leverage Botswana's sovereign credit rating, and then issue equity here in Botswana. Small, medium enterprises, because of their abundant liquidity, they're now getting the attention that they've never deserved for a very long time, because asset managers are awash with cash. So they're becoming more innovative to pick up companies while they're still small and grow with them to become blue chips. An experience that we've seen with some of the companies that are now larger companies on the stock exchange, where they started in the venture board and then ultimately graduated. I think there's a lot of positive sentiment on the buy side, which gives me, confidence that we are not overexposing or exposing ourselves to any form of risk, be it in terms of convoluted valuations or valuations that are not supported by fundamentals or anything. I think we are at a point in time in the country, in the market, where there's a need for assets, and the assets are being developed, and there's supply in terms of liquidity.
Fantastic, thank you for that. And also echoing that simplicity really is key here. I'll pass the next question to Cecilia, if I may. Cecilia, can you please discuss the broader institutional risk issues that increase the risk premium associated with African capital markets? In particular, can you discuss central banks and bank regulation, the capabilities around ESG disclosure and assurance, and the enforcement of contracts through the court system? How much work needs to be done on the investment context? There's quite a few questions there.
Yeah. Okay, thank you. It's a tough one. Yeah, where do we start? I mean, yeah, so anywhere in the value chain that we want to address this, we are talking here about the court system, the rule of law. I mean, there are many issues to address, but one thing I can say is that sustainable finance instruments inherently hold some promise in these areas because they are clear on assets that will be financed, which is not always the case currently with sovereign debt. There is also more transparency in these instruments because there's annual reporting on progress, capital allocation, and impact. So this is why investors like these instruments. In the case of a sustainability-linked bond, yeah, you have specific targets as opposed to assets that have been identified. So how much need to be done in the investment context? I mean, we have the capital markets open for business. Let's put it that way. Capital markets are open for business, and we have a whole host of successful issuances in the markets that can be considered. And these instruments are backed with guarantees, both on the coupon and the interest rate. And so for investors and fund managers, if they take a keen interest on what's happening in the market, there are many good examples of issuances and instruments that can be considered that are backed by DFIs and guarantees and so on. So I think it's more of like cherry picking good examples. And I do apologize. There was somebody who decided to start doing construction work here. So I hope you can hear me. I hope that's
we can hear you fine.
Address the question. Thank you.
It's always the way, just when you're doing a presentation. One more question before we pass over for closing remarks. So I might pass this to Mahamadi, please. How would you characterize the WAEMU institutional investors taking up the ESG bond issuances so far? To what extent are institutional investors with longer term liabilities profiles participating?
Okay, thank you very much. I think for us, the main challenge is to bring a local investor in our market. You know, everybody is still for foreign investor in market, but for our perspective, it's very important to develop a good relationship between institutional investor in our zone, our region, with the issuers. So to bring all investor local investor in our market. Now we're just working with, EcoBank, the Pan-African Bank in our region to issue the first gender bond in our region, and we're trying to attract local investor like pension fund, mutual fund, to invest in this instrument, because it is the first gender bond in our zone, and we are around 17 million US dollar emission, and the coupon is 6.5%. Is a good coupon for this instrument, and the proceed is used to finance SME that's managed by the woman. So local investors is very important for us, and we have to manage ourselves to put all information for this kind of instrument to attract local investor.
Fantastic, and I think that's really great. What you're saying around the gender bonds. I know, speaking to Kopana on an earlier call, I know the Botswana Stock Exchange is actually running a capacity building workshop on gender and capital markets. So I know this is an emerging theme, and I hope that it's discussed at COP as well. I've stuck to time, so I'm conscious there's 2 minutes to go. So I'd like to say a very big thank you to our panelists. We had decades of experience on the call and great insights. We'll try to answer some of those other questions offline. I'm sorry we couldn't take them all today, but I'd like to thank you all once again for your participation, and pass to Peter Onyago for closing.
Good afternoon. Good afternoon to our esteemed panelists, distinguished guests, ladies and gentlemen. On behalf of the management, of our management, we would like to express our appreciation to all our esteemed presenters and panelists for these informative contributions on this important topic on promoting sustainable capital markets in the continent. Your insights will help to pave the way towards the future of sustainable capital markets in Africa. Our gratitude also goes to all the participants for making this workshop a great success. The discussions on fostering sustainable and inclusive growth as a strategy embedded within the financial ecosystem, which has been further enriched by the contributions on best practice adoption, sustainability disclosures, various ongoing efforts in the space, including on innovative sustainable instruments, and the regional perspectives evidence the progress and commitment to champion sustainable capital markets in the continent. The deliberations have also underscored the importance of aligning our capital markets with sustainability principles, showing how Africa's financial systems can serve as a catalyst for positive environmental and social impacts. The African Development Bank is fully committed to promoting sustainable financial markets, which is well aligned with our priorities for promoting the emergence of dynamic financial systems capable of effectively intermediating resources and responding to the green, inclusive, and resilient growth aspirations of the continent. We commend the panelists, presenters, and participants at this knowledge sharing session, and for your leadership and contributions to the development of sustainable capital markets in the continent. We look forward to the implementation of the takeaways from this session and encourage all participants to continue fostering dialogue, collaboration, and partnership beyond today's discussions to drive forward this agenda. Thank you very much for making this workshop a success, and we wish you all the best for the rest of the day. Thank you very much.